Very good evening, friends. Welcome back to my channel, Smart Index Edge. Today, I'm going to tell you about the option-based episodic pivot reflection. That is the indicator which I've coded for to know the institutional footprints. To decode option energy bursts in real time, which is green is equal to bullish EP and red is equal to bearish AP. So you will come to know which side of the market it is going down or up. Imagine you are standing in front of the two giant mirrors, one glowing green for calls and the other one glowing red for puts. Now picture this: when a strong force hits one side, the reflection instantly bounces on the other. That is what happens in the market when institutional traders make their moves. One side pushes, the other responds. You might have seen, for example, morning. Today's example, Nifty gapped up as if it is projecting it is going to go up. Suddenly it went up and then the put option went down. That is the reflection of the energy, both and most retail traders see only the candle, not the cause. But the truth is, every candle you see on the chart is just a reflection of energy happening in the options world. When massive buying happens in calls, that is bullish EP, like a sudden burst of sunlight breaking through clouds. When massive buying happens, you will see it is like sunlight piercing through the clouds. When put get heavy buying, that is a bearish EP, like a gathering of storm on the horizon. But what if both bullish EP and bearish EP flash together? You might have seen, you all are always asked why bullish EP and bearish EP together. On 29th of this month, on Nifty, you were able to see both the bullish EP and bearish EP. That is the moment the market speaks in two voices, one shouting up and other whispering down. It is like two ocean waves crashing against each other. The result is turbulence, confusion, and often a trap for impulsive traders. That's why you should always wait for that. It always starts with the confusion. The market, you will see both bearish and bullish EP, and then one side will pick up. So there will be price line for the bearish and bullish EP. When it triggers, when the price moves in that direction, the price is whether it is bearish or bullish can be confirmed. Think of think of it like a battlefield. Both bulls and bears release their strongest forces at once. It is a tug of war between bulls and bears. That's where both bullish EP and bearish EP is reflected at that price level. The ground trembles, volatility spikes, and the direction becomes foggy. When the direction is foggy, stay away. Stay cool. Little. And this is not the time to jump in. It is the time to observe, to let the dust settle. Most of the traders in the opening bell itself, they jump into the trade. That's why many times I've told you people not to jump into the trade as soon as the market opens, because both bulls and bears will be active. Let the dust settle. You will get the direction, whether it is the bull side or the bear side. And watch who wins the next candle. Another way to see it is, imagine two echoes bouncing in a tunnel from opposite direction. When they collide, you don't hear clarity. When both the sides' voices are coming, there will not be clarity. That's what happens in the market, in the opening bell, or when the market starts falling down, it will show this type of behavior. So, in this master class, you are not just learning an indicator, you are learning to read reflections, decode confusion, and find clarity. When the market speaks in code, because episodic pivot reflection isn't just about price, it is about understanding the hidden rhythm of smart money. So, friends, let us start. This is the introduction I've given it to you for you people. Let us start with the presentation. The birth of episodic pivot is like a storm warning before rainfall. Options give subtle signs before big moves. These bursts in volume and price are episodic pivot. The market's pulse. The same thing happened in today in Reddington. It burst in big move from yesterday 260 to 286. 26 points. That is how it is. It is like a storm warning option. With the burst in volume that Reddington busted because of the earnings news. Earnings, events, and news, so many things trigger the episodic pivots. That is the reason. Market will show you different picture. Market will jump up or gap down to see the change in behavior. In this example, I've taken the stock of Amber Enterprises. You can see EP reflection both bullish and bearish. If you there, you can see on 29th of this month, EP reflected both the buy side as well as bearish side. The price line was 8,312. So you can see there the price line 831. And when price started moving, it started with confusion between both bulls and bears, tug of war. And finally, bears won the picture, and this stock came down, plummeted from 8,400, 500 to now it is trading around 7,800. 8,400 to 7,800 is almost 600 points, almost nearing 10 percentage, 9 to 8.9 to 9 to 10 percentage of fall in this stock. That's how you can catch by the indicator tells you the reflection of both voices. When it comes, you will get to know before other traders get to know the thing. You will be ready for the next move. That's how you can place yourself ahead of others and you can trade better. That is an edge for you people. This is the indicator which I have developed as an EP reflection of option on the underlying. Through option, it will be reflected on the underlying price. Okay. In the next example, let us see, this is the bear crushing all the thing, all the price. This is an example, bears, because bears have dominated there in the Amber Enterprises. When the EP reflection showed, the bears dominated and price has been plummeted. Here, I have taken the example of Nifty, same thing. On 29th, bearish EP and bullish EP has been reflected through my indicator at the price line of 26,053. When it was reflected, actually it had already started, the market Nifty already started its offload from since Deepavali day itself, but it was subtle. Only they made a lot of traps and moves to finally bears won the game. Now price has come down from the 26,050. It is now trading around 25,508. 500. So this is helpful for you people to position yourself. Many traders, they trade in options. Option buying, day to day, instead of day to day buying, you will get twice this type of chance. In a month, you will get a twice chance. One towards the bear side, other towards the bull side. Trendy move you are getting over here. If you would have taken the 26,000 put option and held that position by seeing this bear line, you could have made lot of money. It was trading around peanut and it plummeted to now it is trading at the premium. That's how it is. That is the use of the indicator which I have developed for the sake. Even it is an universal indicator for swing trading as well as positional trading. It can be utilized. Now, how we are reading this energy like a weather forecast? Bullish EP, clouds clearing, optimism rising. If you remember that, Nifty started moving last month, midweek of the month, it started moving from 25,200. That time, bullish EP was triggered and the market moved up towards, that it moved up to 26,000 and odd. That time it became like it was like a clouds clearing and optimism was rising, and most of the even the trading channels, they were forecasting market will go to 30,000. 25,000, 37,000. So many, forecasts were coming in the market. But this is the common thing which happens. What goes up will always comes down. The same thing is happening in the market. It went up and it is coming. And bearish EP is the calm before thunder, correction ahead. That's what happening in the Nifty at present, and most of the stocks are coming down. It indicated, it reflected in on the same day. On 29th, almost even on the Nifty, almost all the stocks reflected 29th, the EP, and some stocks, they started only few stocks whose earnings were there this month, they started showing upward momentum, like State Bank of India. That is an example. After the trigger, it started moving. Same EP was triggered in State Bank of India, around 639 or something. Sorry, I'm telling you wrong thing, but it was 939. Now at present, it is moving around 900 and it went up to 974 and it has come down. It has cooled down to 960. See, both the forecasts trigger lightning in both horizons, whether breakout is brewing or not. It indicates that. So this is a very good indicator which reflects the institutional activity through options on the underlying. That is an indication. This is an example of Reddington, what happened in the market today. You can see over here how the EP was triggered and 263 was the bearish EP on 29th. Let us check where is the 29th. It is here. On 29th, both bearish and bullish EP were triggered and the price line was 263. Today, the price moved up like anything, blasted. You can see this is the example. Like bull lifting all the prices. That's what happened in. You can be into that trade if you know what the institutions are doing. My indicator tells you, reflects on the underlying, whether it is a bullish EP or bearish EP, we can place our trades ahead of everybody. We can be in that trade. You can be profitable. Spot the pulse before the move. Detects option energy reflection between calls and puts, and it highlights bull and bear EPs visually. This indicator highlights bull and bear EPs visually. Maps surges with color flashes. Simple and powerful design. This indicator has been coded for both bull and bear EP. You can visually see on the chart. That's how it is. This is the beautiful indicator. It has been coded. The science behind this script is volume spikes more than 3x of the average volume. You might have heard about the volume surge. You might have even created a screener for that stocks, but I too created the screener on charting everywhere, even on the trading view also I have created, but it picks up only when the momentum it is going up. But what you need is before the episode happens, if you get to know something is cooking over, then you will be prepared for the next move. Then you can place both the call option and the put option on your chart and you can observe which side it is going to dominate and you can enter very early. That is the beauty of this. The price burst, it has been created like that. Volume spike and price burst. It reflects on the through call option and put option. Alerts, auto buy EP and bearish BEP triggers. These are triggers actually. This gives you trigger in the chart. It is a visual representation. Green for bull AP and red for bear AP. Even it is coded for background and it also gives you energy burst confirmation. This indicator. So here I've taken out everything. I've applied only EP indicator, EP reflection, EP on option through underlying. You can see on the Nifty, it reflected around 26,095. Around this area, you can see both bulls and bear EP were dominating. Can you see bull EP and bears are plummeting? Again, bulls are trying to push higher. Finally, bears took the control and market is continuously going down and it is flashing only bear EP, bear EP. You are not going to go long. There is no flash of bullish EP over here. You can take a reference from the left side. Bullish EP was here, and you can guess where are the levels. You can plot from where the EP was flashed, where the bulls were under control, and you will get the levels also. You can mark the levels also with this indicator. So, practical use, what you can do is you can upward bullish EP is reflected, you will get an upward momentum, it seeks supports. Downward reversal, you reduce longs. Both battle zone breakout setup. So you can get the both breakout zones. So like that, you can trade properly. Your direction will be clear. Your mind will not be cluttered by intraday noise. Why I'm telling intraday noise is the market today, the same thing happened. Market projected itself as if it is going upward, such a big bar, flashed in the opening bell, and they presented with open low candle also on the call option. That is the thing. See how the institutions deceive the people. That was the thing. Even on the persistent system, which was reflecting bearishness, the price gapped up to the EP level and then it was plummeted. That's how it is. Market makers trap the retail traders. But if you know through my indicator, which is the direction, who is dominating, whether the bear or the bull, then you will not be in the wrong foot. You will be trading better. Your direction will be clear. Your mind will not get cluttered or disoriented by the market's behavior. Energy shifts are emotional waves. Market emotions captured in price burst. That's what? It was an emotional wave. The EP indicator visualizes where emotion turns into motion. That is what needed for us. For a retail trader, he has to get the visualization of the emotion turning into motion. Yes, traders, you must get the emotion. Emotion will be there. You will be carried out by so many things, by the disturbance of the price movements. But you will get clarity with this indicator, EP indicator, which side you need to trade. Intelligent automation with trader insight. It is intelligent way of getting the thing. Time frame adaptive. This is if you change to the hourly or 15 minutes, you will get the bearishness and EP will be reflected. So you will be knowing which side of the trade you are going to take the trade. It flashes and labels customization of the options. It tells you which strike price also. On the label on the top side, it reflects which strike price you need to be in. It was reflecting, morning it was reflecting 25,500, the strike price. You can select the strike price and you can go through that, which direction the market is going. Here I have taken, because this EP reflection option indicator is act through multiple assets. So that's why I've taken the example of the Kotak Mahindra Bank. That is the underlying you are seeing and the EP was reflected on 23rd. This was little bit earlier, and bearish EP was reflected on 27th. Directional EP. It was confusing EP start with on 23rd. On 27th, you get a clarified bearish EP, single-sided. Then you can see after this bearish EP reflection, the Kotak Mahindra Bank has gone down, even in between uh, episodes of upmove, the direction is clear. That is even on the options, it is very, very helpful. That I am on the chart of the put option, you could have been, by seeing the underlying, the reflection, you could have taken the position in the put option that was trading around 70, and it has gone more than 40 rupees. More than 40 rupees from 17, it could have appreciated. You could have been in this game with clarity and conviction. Here in crude oil commodity, bearish EP was bullish and bearish EP were reflected on the same day, on 29th. Both bulls and bears start with, it will happen like that. And then you can see bearish EP is dominating now. The market is going this one. You will not be, so this is sell and rise. There is a bearish EP. When the price touched to that level, the price has been plummeted. Same thing, the market makers cannot trap you. You will be with clarity. You know that they are trapping, and you will be ready for sell and rise opportunity in this crude oil. I am showing you the example actually. So it works through multiple assets. That's why I'm taken the in commodities, in crude oil. I've taken in the uh, gold. Gold, it had come down. Now at present it is reflecting bullish EP. So bullish bears, and it is moving higher. Still, it is near the bearish EP. It is testing the bearish EP. But it has crossed the bullish bears and bulls are dominating over here. That you can make out very early, and you can be in the game, proper game. Even on the Bitcoin, cryptos also, this EP can be utilized. Reflection of the high volume can be utilized for your directional trade. You can see bearish EP was generated on 29th. The Bitcoin is moving down. That's how it is. I've taken even on the USA stocks. As an example, USA stocks, and in this stock, Meta platforms, it reflected bearish and bullish EP on that day. After the confusion, the bears have dominated and the direction is moving towards the downside. It was triggered around 751, it is around 639, almost 100 points down. 100 points down in this stock. More than 10 to 12 percentage, 12 to 13 percentage of more. You could have caught this, or you would have booked profit if you were in the positional trade in this Meta platforms. That is an example I'm showing. It works through multiple assets. Here, you can utilize through ETF also. This is the Vanguard S&P ETF. I've taken an example. I've applied that. You can see bears dominated, bearish EP, and then bulls have taken control. And the bearish EP has been formed around 631 on 29th day. Now the price is moving down. 631 now, it is 623. That's how you can capture the early move, or you can book your profits if you are in the trade. Two ways you can do the move. Reflection status, see, it reflects symbol on the top, strike price, bullish EP, bearish EP, and also timestamps. It says the time also, on which day, and all those things with price levels. That is the beauty of this indicator. It shows the symbol, it shows the strike price, and also bullish EP and bearish EP, and also the date on which it has been occurred. So historically, you can go and check the things. You can compare it. That's how it is. So if you want to have an access, this is the paid indicator, friends. Educational purpose only. You can contact me on WhatsApp number 9845209600. It is not financial advice. Okay, friends. Thank you very much. Nalinakshi Swami signing off.